Today is May 2nd, 2011, and this is a video analysis from Berkenwood Reports at Tulane University. I'm Jamie Epifano, and today I will be discussing Susser Holdings Corporation. Susser trades on the NASDAQ under the ticker symbol SUSS at $13.82 a share. The stock has been up over 60% in the past 12-month period, and we think it has room to climb. Susser is a family-led convenience store operator and wholesale gasoline distributor headquartered in Corpus Christi, Texas. The company's operations are focused into two segments, the retail convenience stores and the wholesale gasoline distribution operations. As of January 2, 2011, Susser operated 526 convenience stores throughout New Mexico, Texas, Oklahoma, and Louisiana under the Stripes brand. Over 90% of Susser's operations are based in the state of Texas, though making the Lone Star State Susser's key market. Of these 526 convenience stores, 313 of them operated in-store restaurant food services. Susser has differentiated itself from other C-store operators by offering a proprietary food service run in-house called Laredo Taco Company. Laredo Taco offers fresh cooked breakfast and lunch tacos, fried and rotisserie chicken, and other hot foods. The company's convenience stores also offer numerous private label items unique to Susser stores, including private label coffees, energy drinks, meat snacks, candies, and cigarettes. These items are often both cheaper for consumers and also higher margin products than comparable national brand name products. As of January 2, 2011, Susser also maintains 430 long-term wholesale distribution contracts with other independent convenience store operators. Three highlights we believe are key to the future growth potential of Susser are their growth strategy, their recent debt financing, and the changing demographics in Susser's key market. Susser's growth is driven through acquisitions of convenience stores and contracts with dealer sites in addition to building new stores and renovating older stores to a larger layout. All stores built since January 2000 average 4,900 square feet, with more fuel stations and parking space, allowing each retail store to serve more customers during peak times and to provide greater product variety. Susser's recent debt refinancing ensures added financial flexibility. In May 2010, the company refinanced almost all outstanding debt, lowered their cost of debt, and extended the maturity. Susser's solid financial position will allow the company flexibility to pursue growth options throughout different financing opportunities. Texas, where 90% of Susser's stores operate, is experiencing a rapid growth in population that we believe will benefit Susser. The Hispanic population has grown especially quickly. Susser's geographic concentration in Texas allows the company to focus its product offerings to reflect local consumer preferences. Susser's proprietary in-house restaurant, Laredo Taco Company, offers food items that are popular with Hispanic customers in addition to appealing to the larger Texas customer base. As of January 2, 2011, the company announced it held $47.9 million in cash and cash equivalents and had no outstanding borrowings on its credit facility. In October 2010, Susser acquired 39 long-term fuel supply contracts for wholesale dealer sites in Texas and Oklahoma. In the transaction, the company also acquired one convenience store in Texas in September 2010. In May 2010, the company completed the refinancing of almost all outstanding debt to reduce interest payments and extend maturities. As part of the financing, all outstanding unsecured notes due in 2013 were discharged, and the company issued $425 million in 8.5% senior unsecured notes due in 2016. Susser operates in two highly competitive markets, the retail convenience store industry and the wholesale fuel industry. The Stripes retail segment competes not only with other convenience store chains and independent convenience stores, but also supermarkets, drugstores, and discount stores. To differentiate its convenience stores from competitors, the company has developed several initiatives, including implementing a larger store model to drive additional volume and offering food services and private label items unique to Susser stores. The wholesale segment competes with major oil companies that have fuel distribution operations and other independent fuel distributors. We believe that Susser's mix of retail and distribution business segments positions to take advantage of any cost savings such as the margin fuel suppliers charge over their cost basis. In comparison, peers would have to absorb the additional costs or pass them on to customers, resulting in lower profits or less competitive prices. The main competitors of Susser are not publicly traded companies. Susser mainly competes with other convenience stores and gas stations in the South. The most easily comparable companies that could be construed as Susser's peers are Travel Centers for America, The Pantry, and Delec U.S. Holdings. Currently, none of these companies are trailing 12-month PE ratios due to the negative earnings these companies incurred throughout the recession. However, historically, Susser has traded at a higher price-to-earnings ratio than its competitors, indicating that analysts have speculated potential future growth in earnings. We give Susser Holdings a market outperform rating and expect the stock price will rise by 33% in the next year and reach a 12-month target price of $18.14. We arrived at this target price using 3 different valuation methods, while also considering economic factors and Susser's growth-oriented business plans. The company is in a strong fiscal position to finance growth opportunities, especially considering that the Texas economy, where the majority of Susser's business operations have continued to rebound strongly from the financial crisis, and strong population growth in the area should drive future store sales. Based on all of this, we expect another great year from Susser. We came to our target price using a weighted average of 3 different types of common valuation methods. We used price earnings per share, price book value, and EV to EBITDA. We used Casey's General Stores, The Pantry, and Couche-Tard as peers in all of these calculations. Although these companies do not necessarily compete with Susser, their ratios are comparable and relevant to our valuation. We weighted the EV to EBITDA method 50% and the other 2 methods 25% each. We weighted EV to EBITDA the most as we feel it is most relevant to Susser's business model. The combination of these valuations methods is what brought us to our 12-month target price of $18.14. On March 18th, our team traveled to Corpus Christi, Texas, and met with CFO Mary Sullivan and financial analyst Blake Overall. Upon our arrival, we were taken on a tour of the brand new 8,300 square foot headquarters building. Following the tour, we visited different Susser convenience stores. The team was able to see and compare the difference between the old, smaller Susser store and the new, larger store model that includes the in-house Laredo Taco Company food service. We were also able to sample the Laredo Taco lunch offerings, and we were impressed with the quality of the food and service. During lunch, the brand managers explained that the state of Texas has experienced a higher-than-average population growth rate for decades. Most notably, the Hispanic population has been the fastest-growing segment. This core customer base has been especially receptive of the hot, fresh meals at affordable prices offered by Laredo Taco Company that are reminiscent of the traditional Hispanic cuisine customers might prepare at home. This has been our presentation of Susser Holdings. Thank you for listening.